So.
Yeah, we're ready. They got a call. Thank you.
All right, I think we're getting ready to go. A few minutes. So.
Yeah, with you.
Well, Brian, I disagree. You call it the War of Northern Aggression, but it's also called the Civil War. So I think we can get started. Right, right. That's why I was just saying we call it the Civil War, but I get you. Yeah. Tomato, tomato.
Yes, you really are.
All right, colleagues, good afternoon. We have 3 bills today. Hopefully they will be brief depending on how long you guys want to talk. But hey, we're here all day. And as a reminder, we do have an event this evening, so hopefully we'll get some participation. We'll start off with House Bill 223, which is Delegate Queen. And do you have a panel, ma'am?
Okay.
That is not good news for your bill, but okay.
I'm always your friend.
I know. Somebody else is coming when we wait.
All right, Delegate, you can begin when you're ready.
Okay, we'll get started. So good afternoon, Chair C.T. Wilson, Vice Chair Brian Cosby, and my esteemed members of the Economic Matters Committee. How are you? HB 223 is a bill that allows us to use the ability to repay mortgages rule that kind of alters that requires that creditors makes reasonable good faith demonstration of their consumers' ability to pay for residential loans. We have seen that this sometimes causes a hardship for certain borrowers, and so we're looking at ways that we can make home ownership a dream for all of Americans, especially here in Maryland, and look at other ways to check creditworthiness. And so this is not the first time you've heard bills like this. There was a whole approach back in 2022 where we looked at creditworthiness that were bills sponsored by then Speaker Jones. You actually heard this bill as it is currently today, HB 400 last year. And so it really looks at putting these CDFIs in the same posture as some of our national banks, where they can look at other means to see whether or not people have ability to repay, looking at their payment history, looking at other issues, other things that would deem favorable in their ways to pay the bill, pay back the mortgage. So again, this is an attempt to, we're not trying to take away all the guardrails that we have, but on individual basis, we're allowing for these CDFIs who work with these small, low income consumers to try to make sure that they can get home mortgages. So again, we're going to ask that you look at passing this bill. It was actually presented by Delegate Kipke last year, HB 400, and it did pass out of this committee as well as the House. So hopefully you'll allow me to have that same favorable privilege. Thank you.
Thank you very much, Mr. Chairman, members of the committee. Robert Denton on behalf of the Maryland Bankers Association. We're here today to support this bill. I remember when this legislation was enacted many years ago. It was a Steve Lafferty bill, if any of you remember him. And it was at a time when banks and lenders, mortgage lenders, were being accused of not taking into consideration income. They were making loans that they knew or should have known that borrowers would not be able to repay. And this was when the bottom fell out of the real estate market, and all of a sudden we had a big spike in mortgage foreclosures. Well, that was back in 2008. This is 16 years later. And I think in today's market and in today's world, what is a primary concern for you all and for us is making sure that we do everything we can to enhance low and moderate income borrowers and the communities they live in. And this bill, as written, would only apply to a loan made by a community development financial institution as already defined under Maryland law. So we think that this will facilitate those loans. All the other underwriting standards will still be in place, but this will not be something that will on its own exclude a lower moderate income person from getting a mortgage loan. Therefore, we support the bill. Thank you.
I want to thank the committee. Today. Co-chair of the Maryland Mortgage Bankers and Brokers Association, and we support this bill wholeheartedly. At its base root, this bill simply brings Maryland in line with federal statute with the CFPB. These types of loans are able to be done by CDFIs in 43 other states. And the default rates are incredibly low. If I can quickly read some statistics for you. This is from Q4 2022. 90-day lates for Fannie Mae were 0.65%. For FHA, they were 3.62%. For the largest provider of these mortgages in the country, they were 0.42%. So they were lower than Fannie Mae and they were lower than FHA. So these loans, the market has proven that they're not of greater risk than anything else that's out there, largely because of the responsible stewardship that CDFIs provide. In 2013, when the CFPB was addressing the final rule, they did not have those statistics. They did not know how these loans were going to perform in the market, and they still made the exemption for CDFIs in the ability to repay rule. Maryland simply wrote their state level rules beforehand, and no such exemption was entered into it at that point. So that is what we're asking for in this bill, is for the citizens that want to become homeowners from underserved communities to have the same ability to do so and all the resources at their disposal that people from similar communities in 43 other states in the country have. And it's time for Maryland to be in line and back it up. So we appreciate your support and are hopeful for it. Thank you.
Thank you. I have a brief question. To anyone on the panel, I noticed that the Consumer Protection Division of Office of Attorney General was opposed to this. I think they were last year as well, correct?
They were.
Do you remember what their rationale was?
They're just concerned that this would lead to what we saw back in 2008, but as we've shown that we haven't seen that with the history of what we've seen in practice.
Right, and I guess the only question I would have is any additional safeguards. Again, it's frustrating sometimes when you see the opposition from the Office of Attorney General. So I'd be interested in what, if any, safeguards that they would think would strengthen this bill. So
I can ask them,
because I understand there is some questions. I remember this from last year. I do see as it's still passed, but I don't want this to be stymied again. There's no point in flying this out of the House if it's just going to die in the Senate. And do you remember, was that the same issue? Is that the reason why it didn't pass out of the Senate? Do you remember?
I don't think it got a hearing in the Senate.
Was it a timeliness issue
Time issue.
or a sponsor issue?
Mhm.
Okay, well, we'll find out. I don't remember. Who was the sponsor last year? Hilarious. Okay. Well, either way, I do understand the rationale. I would like to see if there's any possibility of some assistance from the AOG. See if there's anything we can do to shore this up, to shore up their concerns.
No, that's understandable. I will.
Thank you. I see a question from Delegate Weibel.
Thank you, Mr. Chairman. Could you provide some examples of the CDFIs? Who are we talking about exactly?
So community development financial institutions, they're basically a very small sector of the banking market and there's a number across Maryland. You might be able to name some better than I, but they have within their charter a requirement to focus on and have programs that specifically address the needs of underserved communities and are required to have people from those communities on their boards and different things like that. So they are the community focus aspect of the banking world.
So you don't know how many there are in Maryland offhand?
13 of them, but
13?
we should
Okay.
know some names of them.
All right,
I should
thank
have
you.
known that.
And in totality, what are we talking about as far as dollar amount of loans that they would make under these programs annually?
Are you talking about Maryland specific ones or
Yeah.
nationwide?
Maryland.
I mean, I'd be stabbing at it and it's probably difficult to estimate because they're a little hamstrung right now in their ability to actually lend them, but I don't know, somewhere around 50 to 100 million, but I don't want to
Okay.
make a, make a data point out of it.
And are these only residential loans or are they also commercial loans?
The ability to repay rule is strictly focused to residential
Strictly
properties
residential.
on primary residences, period.
Okay, all right, thank you.
Seeing no further questions, I believe that, oops, apologize, somebody wasn't looking. Go ahead.
Thank you. On these CDFIs, it's kind of a general question. How do the terms typically compare to what's in the open market as far as the kinds of mortgages and the interest rates of mortgages? And I'm just curious.
So largely, they're going to be fixed rate mortgages. They do, well, it sounds like we're removing guardrails, and we are, but under proper stewardship, there are other guardrails that wouldn't be required if you were to go get a mortgage, like 20% down payment. So they are going to have larger down payments than what you see, like Fannie Mae can do 3% down. They also are going to take a very, very tight and stringent and documented look at rental history. So following some logic of, if I can, which you'll hear from homeowners in these communities all the time, I've made on-time rent payments for 5 years and my mortgage payment is the exact same as my rent. How are you telling me I can't make a mortgage payment? And it's a pretty good argument, right? So like, and there's ways of documenting these payments where they're not just taking an individual landlord's word for it. There's technology now that can scan bank statements and look at a 2-year history and see it coming out same day every single month and things like that, and securely transfer it over to systems. So there's some guardrails in that where they're pulling back on some stuff, but they are lifting the bar on others.
As far as the rates are concerned, are they comparable? If they jump through all those hoops, do everything they're supposed to do, are they comparable?
They're higher.
How much
They're
higher?
going to be higher than a typical 30-year fix, somewhere between 2.5% higher.
All right, thank you.
Yep.
Seeing no further questions, I believe that concludes this panel and this hearing.
Thank you. Thank you.
Moving on to House Bill 262. Delegate Plavkovich, do you have a panel?
Yes, Mr. Chair.
You can go ahead and feel free to call them.
All right, and they're welcome to come up and join me, and I'll go ahead and get started. I think it's Marceline White and one other person.
Apologize.
Marceline White and one other person who should be on my panel, and if they're here, they're welcome to come up. Otherwise, I'll just get started.
Okay.
So good afternoon. For the record, I'm Delegate Julie Plavkovich-Carr, here to present House Bill 262. This bill would conform Maryland to federal law regarding inclusion of certain information on credit reports. For context, credit reports and consumer reports are generally prohibited from including adverse information that is older than 7 or 10 years old. For instance, a bankruptcy, a late credit card payment, an arrest, or other information that might make it harder for a person to get a loan or a job or to rent an apartment has to be excluded as if it is more than a certain number of years old. These prohibitions exist to ensure credit reports accurately depict a consumer's current financial status. But there are exceptions in the law. When someone applies for a loan of $50,000 or more, a life insurance policy of $50,000 or more, or to be employed in a position where the salary is at least $20,000, older adverse information can be included on the credit report, regardless of the age of this information. The problem is that these dollar thresholds in state law are very low. For instance, Maryland's per capita income is about $50,000. And I think it's not a stretch of the imagination that there are very few salaried jobs at $20,000 or less in Maryland currently. So that means pretty much all salary jobs in our state are exempted from legal protections against use of old consumer data. But that wasn't always the case. When these thresholds were enacted in federal law and in Maryland state law in the 1970s, they were reflective of the times. The median household income was less than $15,000 when our state law was enacted, when these thresholds were enacted. And the median mortgage in the 1970s was roughly $50,000. Back then, we had good alignment between the law and real world conditions, but that is no longer true. Congress recognized this problem in 1996 when they updated the dollar thresholds in federal consumer law to reflect that prices and wages had increased over the prior 25 years. Congress updated the thresholds to $150,000, $150,000, and $75,000, respectively, the same thresholds that are in this bill. Maryland state law, however, was never updated. This discrepancy between federal law and state law puts Marylanders at heightened risk of being rejected when applying for jobs, mortgages, small business loans, and other forms of credit. At this point, Maryland is an outlier. We're one of only 6 states that still uses the 1970s era thresholds. HB 262 would match state thresholds with federal thresholds and provide Maryland consumers with the same level of protection as in federal law. Thank you.
Thank you. My name is Franz Schneiderman. I work with a group called Consumer Auto that works to protect Maryland consumers and Maryland drivers. Thank you, Chairman Wilson, members of the committee, for the opportunity to address the bill. Strongly support the bill because it would, as Delegate Carr suggested, modernize Maryland law and make it consistent with federal law and add some additional protection for Maryland job seekers and mortgage borrowers against the use of old and arguably unfair credit information. The general principle in federal and state laws about credit reporting is that we don't allow the use of negative information that's more than 7 years old. And there's good reasons for that. That information, the law exists to give consumers basically a new start if they've had a problem in the past, but done better in the last 7 years. The old information is less relevant. And also the old information is more apt to be inaccurate. Frankly, there's a lot of inaccurate information on credit reports in any event, and the older information is more likely to be inaccurate. As Delegate Carr suggested, these thresholds we're dealing with are really quite dated. Even the federal standards that we'd be matching here date from the mid-90s. So those are 30 years old, and Maryland standards are really so low as to be not very relevant, particularly with respect to job applicants. The existing ceiling of 20K obviously doesn't apply to very many jobs. Raising it here to 75K would make it much more meaningful protection under Maryland law. Maryland law excludes the use of credit information on job and pay decisions in most cases, but does actually allow it on certain categories of jobs. And if there's a bona fide interest, quote unquote, from the employer, in ways that make it that apply to a substantial number of jobs. So this bill would add protection for job seekers and other Marylanders, and hope you'll give it a favorable report. Thank you.
Thank you. I believe we have Marceline White.
We did.
Thank you.
Good afternoon, Chair, members of the committee. My name is Marceline White. I'm the Executive Director of Economic Action Maryland. Economic Action Maryland advances economic rights and equity, as well as housing justice through research, education, and direct service. We are here in strong support of House Bill 262. I want to thank Delegate Polakovich-Carr for sponsoring the legislation. Anyone who has tried to rent an apartment, taken out a loan, tried to get a mortgage knows the importance of credit. It's essential for any kind of consumer finance and for anyone's economic life. Consumer credit and credit reports affect every aspect of our lives today. Old information on a report can negatively impact an individual's access to credit. This bill is a simple bill. It harmonizes the Maryland Consumer Credit Reporting Act with the Federal Fair Credit Reporting Act. As has been stated before, certain information can be used in connection with credit transactions, and this simply updates the amounts in certain ways to modernize what amounts can be continued to be reported, certain kinds of jobs, certain kind of job applications, certain kinds of mortgages. We think these are reasonable updates that sort of make sense with the current economy and conform to the FCRA thresholds. We think this is a common sense law and provides important protections and make sure that federal and state law are harmonized. For all these reasons, we support the legislation and ask for a favorable report.
All right, seeing no questions, I guess I have a brief question with regard. Apologize, we're having some difficulties up front. Well, and I want to be clear, like this, while it does have that 7-year limit, there are certain exceptions to that. I think, including like a mortgage over 150,000. There's certain things that can still be in after 7 years, according to the federal lineup, correct?
Yes, and this
And
bill
the-
maintains that. It
Right.
just changes the
We're
dollar
keeping all the
threshold.
exemptions. We're just changing the dollar amount.
Correct.
Basically, and I think 1976 was the last time this was
Yep.
updated.
Yes.
And whereas the feds was 96, which I guess is modern. So that's all it's seeking to do, correct?
That's all correct, Mr. Chair.
Okay, Delegate Rose, thank you.
Thank you, Mr. Chair. Just a clarifying question. So does this just strictly apply to credit reports, the 3 major credit reporting agencies? Or does it also include if an employer does a background check?
Yeah, it's the latter. So any type of consumer report, so that could be a background check for employment, it could be an application for a loan, it could be you're applying for an apartment. There's kind of a broad array of where these consumer reports can be used, and credit reports are kind of a subset of that.
Is it just lending, or does this include insurance underwriting for car insurance and things of that nature?
So the current statute, and the bill doesn't change this, allows these exemptions of looking back at older information for loans, for life insurance, and for salaried employment, basically. So I think other uses that you might be alluding to would already are not covered. They can't use the older information that's older than 7, or in the case of a bankruptcy, 10 years old.
Okay, thank you.
Seeing no further questions, I think that concludes this panel. Thank you very much.
Yeah.
Lastly, we have Delegate Wu with House Bill 53. Go ahead, sir.
Okay, thank you, Mr. Chair. Good afternoon, Chair Wilson, Vice Chair Crosby, and members of Economic Matters Committee. For the record, I'm Delegate Cha Wu, District 9A. I'm here today to propose a bill that will create a task force to study e-commerce monopoly in Maryland. What's the e-commerce monopoly? I mean, large e-commerce platform, usually with revenue exceeding $10 billion annually. They serve as the e-commerce platform for the third-party sellers. That means people are selling products on their website or platform. That used to be the case. However, e-commerce platform used to be a neutral platform for people to sell products. It's changing. Now situations are changing rapidly. Some large e-commerce platforms manufacture their own products to compete directly with third-party sellers. Majority of those products closely resemble or aligned with products sold by third-party sellers. Because of the advantage of platform, they have all the data on sellers and buyers, and the e-commerce platform's own products have a huge advantage in terms of pricing, attract customers, etc. This unfair advantage, fueled by immersed data on buyers and sellers, threatens competition and creates an even larger monopoly. We don't want to see eventually there's just one e-commerce platform or just one seller. A recent example is that Amazon, which was sued by Federal Trade Commission for using data of sellers to create products that are very similar to successful sellers in order to take their profits. This is harmful for smaller business, not only because they rely on e-commerce platform and thus are required to provide data, but also because they are being out-competed by the platforms themselves. My bill will create a task force to investigate the instance of e-commerce platform misusing the data of their sellers in order to expand market power and create an even larger monopoly. The task force will include stakeholders from various fields, including 6 members of the General Assembly, the State Attorney General, a member of the Antitrust Division, and a representative from commerce and many other small businesses. The task force will create a detailed report to guide us what and how we should do to protect small businesses for fair competition, data rights, intellectual property, and privacy, and at the same time, not to hinder ingenious innovation by e-commerce platforms. At a time when AI and data are changing every aspect of our life, right now and in the near future, it is critical that we keep a close eye on these technologies applications, and businesses. This is creating an urgency for us, either pay attention now or too late to be mitigated. In the fiscal note, it seemed the Antitrust Division of the Office of Attorney General does not have the capacity to keep an eye on this important issue. The task force may help them to understand what are the necessary resources they are in need of and what direction they maybe should focus on. I believe that no business in the e-commerce platform should be treated unfairly by those large e-commerce platforms because they want to sell their products, especially when Maryland is in favor of small businesses. Thank you. I'm looking for favored report.
Thank you, Delegate. And I'm not seeing, obviously, there's some written opposition. Could you explain, I'm sure you've received some of this, what the industry pushback is? This sounds like it's just a study. You understand? What's the opposition we're dealing with here?
And because there's not much study on this issue. So we look around with the national legislator or with the State Department. We don't have any really study or analysis on this before. So we don't know what if this will come out. So people are afraid of this report, right? We don't know. So basically, I don't find any information on this issue, especially locally. Nationally, because a lot of business against this, think about Amazon has been sued by FTC. So there's a huge concern there.
Okay, I appreciate it. Looking around the room, I don't see any questions. Horrible. Yeah, horribly. All right, go ahead, Pippi, go ahead.
Thank you, Mr. Chairman. Thank you, Delegate. So it's 10 billion is the number, right? It's a lot of zeros. Is that any business that has an annual revenue exceeding 10 billion that has a president of the state engaged in selling e-commerce? Is that right?
There are not so many. You're right.
Okay. Can you identify at least a few of these businesses that meet that category in Maryland so we have a reference?
Amazon.
Amazon?
Yeah.
Okay. Facebook?
And Facebook is general, we don't consider e-commerce platform. It's a more social media platform.
Okay.
But they're doing business like that as well.
Okay. All right. Thank you, Mr. Chairman.
Seeing no other questions, I do believe that concludes your panel. Thank you very much.
Okay, thank you.
Colleagues, I believe that that concludes our hearings for today. Please do not get used to the brevity of these hearings, but don't stretch them out if they're, going to be brief anyway. You know who I'm talking to over there, Delegate. But and don't forget we have an event this evening. Looking forward for as many folks to show up as you can. 2 events. Okay, well, good luck with that. So I'll see people tonight. Is there 2? One got canceled or rescheduled. They didn't want us. Apparently somebody did not want us to eat with them tonight, so it was canceled.